an intelligent CFO will think maybe I'll trade the one for the other. But think about what happens if every CFO simply capitalizes their company on Bitcoin. If half of your if half of your enterprise value is Bitcoin and the other half is your operation, if Bitcoin goes up 25 or 30% a year, doesn't the half of your enterprise also go up by 30% a year? So you can see that if equities capitalize on Bitcoin, there'll be a convergence.
Token 2049 is kicking off this week in Singapore. Let us know if you're attending the event. As the conference unfolds, it's the perfect time to check out this insightful interview with Michael Saylor and Saifedean Ammous. In this conversation, they dive into how Bitcoin could transform fiscal responsibility for governments, potentially back national currencies, and ignite global competition for Bitcoin reserves. At the time of this discussion, Bitcoin is trading around $60,000, with a 5% increase in the last 24 hours and a 5% rise over the past 7 days.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Time and the law of large numbers says that Bitcoin's not going to grow 4x this other large pool. It's going to grow 3.5 and 3.2. And I don't think it becomes exactly the same because Bitcoin is more efficient. My model, I've said before, is like I feel like, if you look out in the indefinite horizon, if the money supply or currency in dollars expands at 7-8% a year, and if you start seeing the S&P index expanding at that amount or that amount plus, it'll either be that amount or that amount plus 2 or 3%. If that's what happens, then Bitcoin should be growing 8-10% faster than that, or 8% faster with more volatility. But you can imagine a world where Bitcoin is 20 vol, 20 ARR, and the S&P is 12 vol, 12 ARR, and the currency supply is 8% expanding. And of course, again, that's the bear case, the bull case. The bear case for equity is that equities underperform the currency supply, and that comes down to tax policy. I mean, if you're looking at the primary levers, right? The case for equities outperforming the currency supply is innovation and productivity. If you're really, the invention of robots and AI, if you do that, then a company basically has, you could have like 100 employees in the company doing the work of 10 million people with just AIs and robots. So in that case, you've got a lot of equity value and not a lot of cost, right? So the bullish case is you invent new stuff. Now, what keeps you from outperforming the currency supply? Tax regulation, right? So taxation and regulation that drives up your cost one way or the other. And those are political decisions, right? That take place. So it seems like the world's been, the S&P is like, what is it like plus 8-9% a year, and the currency's like plus 7 to 8. They're almost equal, but maybe S&P is up 1% more. Well, I think we can't expect Bitcoin to perform 50% ARR for the next 30 years. I mean, because then it would be everything and there's nothing left. So what you got to expect is that it's converging toward that, but not necessarily ever reaching it.
As we just heard, Michael Saylor discussed how Bitcoin could back national currencies and reshape fiscal responsibility. Now, let's take a closer look at how governments might shift their focus toward competing for Bitcoin reserves in a world where money printing is no longer an option. Could Bitcoin become the cornerstone of responsible governance and financial stability? Let's dive deeper into Michael Saylor's insights on what this could mean for governments and the global economy.
And that's a triumph of the rational mind virus.
Absolutely.
You're describing rational governments, and I agree with you. I think that's a beautiful thing, right? And we've seen with individuals that discover Bitcoin become more rational. right? A lot of the Bitcoin maxi, mantras, and tropes and are actually rational observations. So I think Bitcoin rationalizes things. It's rational to minimize waste, maximize efficiency, stretch out your time horizon, minimize counterparty risk, maximize optionality, right? These are all things that happen, right? And so I think that the Bitcoin, as it spreads, it will introduce rationality. It will infect individuals, then it infects families, then it affects corporations. Like a corporation that adopted Bitcoin as capital asset, at the end of every quarter, they would say, how much of this cash do we want to dividend out and pay 30 or 40% tax on? How much of this cash do we want to use to buy our equity back? And do we have too much equity outstanding? How much of this cash do we want to use to buy small, mid-sized companies and do mergers and acquisitions? And how much of this cash do we want to convert to Bitcoin? Okay, and that's a rational set of decisions as opposed to the irrational decision. Oh my, we just have to get rid of it because we know we're burning it if we just put it in the bank account. So I think the companies will get more rational as Bitcoin spreads. And I think countries will get more rational because they'll have more optionality. In that Bitcoin 24 model, right? We didn't just create the macro model. I mean, the truth is the macro and the Bitcoin model, they're interesting, but you know, no one's there's not nearly as much emotional attachment to a generalized global asset class. So what's really interesting is the micro models, the fact there's an individual model that says, this is what happens if you adopt the Bitcoin standard and move to a place with no income tax. You're a triple maxi, right? And that's a family decision that you make, right? This is what happens if you actually take a mortgage and buy Bitcoin with it, right? So that the micro model for an individual has a lot of emotional gravitas. And then there's a corporate model, a micro model for corporations. And it shows what happens if your company sweeps its cash flows into Bitcoin, and you can adjust that. And you can make assumptions about, okay, I have a company. What if I sold half my equity and bought Bitcoin with it tomorrow? Your company's worth whatever, $100 million. What if you sell $100 million of stock and bought 100 million of Bitcoin and you held the Bitcoin for 21 years? Like now you can look at that. That's very actionable. So I think that the corporate model is interesting. And then I think we created these nation state models, but we created one for an indebted nation state. It's like you're an indebted nation state. What happens if you start to buy Bitcoin? Or okay, you're in debt. Well, what if you issue debt to fund operating losses? Generally not a good idea. What if you issue debt to buy Bitcoin? Actually turns out to be a pretty good idea. Right? I mean, you can say debt's bad, but that's not bad. If I issue $3 billion of debt at 1% interest and then I buy Bitcoin with it, that's how you outperform the S&P 500. It's only bad when you issue $3 billion of debt and then you spend it on things, spend it on expenses and have nothing to show for it. If you buy $3 billion of consumable goods, then it's bad.
In this conversation, we've explored how Bitcoin could revolutionize government fiscal responsibility and spark competition for Bitcoin reserves. Now, we'd love to hear your thoughts on a few key questions. Can Bitcoin fundamentally change how governments manage their finances? How do you think governments will compete in a Bitcoin-driven economy? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.